Transforming a modest $100 trading account into a substantial $10,000 is not a matter of fortuitous chance, esoteric technical indicators, or enchanted methodologies whispered in trading forums. Rather, it is the deliberate cultivation of psychological disciplines, mental habits that accrue and multiply with the inexorable logic of compound interest in a savings account. While the majority of aspiring traders fixate exclusively on the tactical apparatus, intricate chart patterns, algorithmic signals, macroeconomic announcements, they systematically overlook the profound psychological architecture that underpins sustainable success. It is precisely this inner framework, the composure under duress, the micro-decisions forged in the crucible of market volatility, and the quotidian rituals, that ultimately dictates whether a nascent account blossoms into prosperity or evaporates into oblivion. Before we continue, make this commitment. This channel isn't about quick fixes, it's about developing traders with mental strength and discipline. If that resonates with you, join us. Subscribe now so you don't miss any of our upcoming videos. Stay until the end and keep progressing with us, one mindset shift at a time. This video isn't just another trading video, it's a mirror for your mindset. Like now, comment what resonates, and stay until the end. Because one idea here could change how you think and how you trade. Let's go. The inaugural habit demanding mastery is patience, not as passive inertia but as an active, discerning vigilance. Novice traders, intoxicated by the prospect of immediate gratification, perceive a nascent setup and experience an almost visceral compulsion to execute, even when the configuration deviates from their predefined criteria. True patience, however, is the refined capacity to endure a torrent of suboptimal opportunities without succumbing to the siren call of action, reserving intervention exclusively for those rare moments when market conditions converge precisely with one's probabilistic edge. This disciplined restraint, practiced with monastic consistency, shields the account from the hemorrhagic losses inflicted by impulsive entries, losses that erode capital with a velocity far surpassing brokerage commissions or inevitable drawdowns. Like financial returns, the benefits of patience compound. Each abstention from a marginal trade preserves capital that would otherwise be squandered, creating an expanding reservoir for future high-conviction opportunities. Discipline forms the bedrock upon which all subsequent growth is erected, ensuring that every action remains congruent with a premeditated strategic blueprint rather than the ephemeral whims of emotion. Absent this unyielding adherence, even the most statistically robust trading system collapses into irrelevance. The trader must codify inviolable protocols governing risk allocation, position calibration, and entry triggers, and then execute them with the fidelity of a machine. For an account seeded with merely $100, the mandate to jeopardize no more than 1 to 2% per trade may appear glacially conservative, a crawl rather than a sprint. Yet across the expanse of hundreds or thousands of iterations, this microscopic preservation of equity functions as a fortress, safeguarding the principle while permitting the quiet alchemy of compounding to perform its work. Discipline is the antidote to self-sabotage, the invisible hand that steers the trader inexorably toward exponential gains. Trade journaling emerges as an indispensable ritual, transcending mere record-keeping to become a mirror for the psyche. By meticulously documenting not only outcomes but the cognitive and emotional antecedents of each decision. Why this entry? Was euphoria or trepidation a silent co-pilot? Did fear precipitate a premature exit? The trader trains the mind to discern behavioral recidivism. Periodic review of this living archive illuminates recurring pathologies, empowers the excision of deleterious patterns, and fortifies virtuous routines. The lucidity engendered by journaling rivals the potency of any technical system, forging a meta-awareness that elevates trading from rote mechanics to adaptive artistry. Risk management, far from a sterile checklist, must be internalized as a philosophical orientation. Risk is the immutable toll exacted by the market, and its mastery is the sine qua non of survival. Neophytes are magnetically drawn to asymmetrical payloads, high-risk setups promising lottery-like returns, yet without the mental reflex to quantify risk as the true currency of engagement, they court annihilation. Embracing probabilistic reasoning transforms losses from existential threats into anticipated variances within a larger distribution. This worldview prioritizes capital preservation above the ephemeral allure of every prospective windfall, laying the psychological groundwork for a $100 seed to metamorphose into a $10,000 oak. Visualization distinguishes the elite from the merely competent. The successful trader engages in deliberate mental simulation, envisioning flawless execution, unswerving plan adherence, and equanimous navigation of drawdowns. This cognitive dress rehearsal, requiring mere minutes yet yielding disproportionate dividends, preconditions the psyche to default to rationality amid the adrenalized chaos of live markets. It is the psychological equivalent of muscle memory, ensuring that when volatility spikes, the response is measured rather than manic. Consistency, the most insidious casualty of neglect, is the silent multiplier of all prior habits. Compounding is not solely a financial phenomenon, it is the cumulative fidelity to process. Adhering to one's framework 90% of the time while capitulating during stress-induced lapses is akin to constructing a cathedral only to demolish a pillar at random intervals. Eventually, the edifice crumbles. Authentic proliferation arises from the relentless replication of disciplined trades, each a modest brick in an ascending ziggurat of equity. Deviations, however tempting, function as termites gnawing at the foundation. Emotional regulation constitutes the ongoing crucible wherein patience, discipline, and risk protocols are stress-tested. The market is a relentless provocateur, daily conjuring impulses to chase losses, overtrade, or jettison the plan. The adept trader cultivates the metacognitive faculty to identify these surges, acknowledge them without self-flagellation, and realign behavior with strategic intent. This is not an innate endowment but a skill honed through iterative confrontation, introspective analysis, and unflinching self-scrutiny. Finally, continuous learning elevates trading from static occupation to dynamic evolution. Markets are protean. Yesterday's edge erodes under the entropy of adaptation. The prosperous trader institutionalizes education. Each adverse print, triumphant exit, or anomalous price action becomes raw material for refinement. By weaving learning into the fabric of routine, the practitioner ensures that mental capital compounds in lockstep with financial capital. Before proceeding into the deeper strata of this psychological edifice, a moment of introspection. Do fear, doubt, or compulsive overtrading sabotage your progress? The stark reality is that strategic deficiencies rarely fell traders. Psychological fractures do. This insight birthed my ebook, Master Your Mind, Master Your Trades, a compendium of actionable protocols to domesticate emotions, entrench discipline, and emulate the poise of institutional traders. If you stand ready to transcend mediocrity, procure your copy via the link in the description or pinned comment. When patience, discipline, journaling, risk sovereignty, visualization, consistency, emotional mastery, and perpetual learning converge, the $100 account undergoes a phase transition. It ceases to be a fragile ember vulnerable to gusts of chance and becomes a controlled fusion reactor, generating growth through strategic calm and iterative precision. The siren song of shortcuts, miracle indicators, viral systems, or adrenaline-fueled moonshots fades into irrelevance. The habits themselves become the strategy, and profits emerge as the inevitable byproduct of psychological coherence. Each restrained impulse, each journaled insight, each risk-contained decision functions as a fractional deposit in the bank of compounding returns. Chapter 1 culminates in an immutable axiom. The metamorphosis of $100 into $10,000 is not an artifact of serendipity or temporal precision. It is the inexorable outcome of mental architectures that undergird disciplined, repeatable, and rational market engagement. Train your psyche with the same rigor you apply to your charts, and financial ascension becomes less a hope than a statistical certainty. The question is not whether the market will cooperate, but whether you will daily forge the mind capable of capitalizing upon it. Chapter 2: Reframing losses, deepening patience, and cultivating detachment. Growth in trading is never merely about nailing entries or divining immaculate setups. The chasm separating those who transmute modest stakes into wealth from those trapped in cycles of depletion is self-mastery. Building $100 into $10,000 is not a singular epiphany but the aggregate of disciplined micro-behaviors, emotional sovereignty, and an unshakable psychological posture. A pivotal mental reframe is the reconceptualization of losses as pedagogical instruments rather than indictments. Many traders internalize each adverse outcome as a personal failing, catalyzing a downward spiral of frustration, self-doubt, and retaliatory overtrading. The profitable trader, conversely, inhabits a probabilistic universe. When risk is capped at a predefined fractional exposure and rules are sacrosanct, losses morph into transient fluctuations within an ergodic process. This lens preserves capital while transmuting experience into expertise, allowing the $100 to accrue wisdom alongside equity. Patience must be multidimensional, waiting not only for entries but for the full orchestration of one's edge to unfold. Small accounts frequently implode through overtrading, the frenzied pursuit of action that hemorrhages both capital and confidence. By nurturing the capacity to abstain until setups achieve statistical criticality, the trader ensures each deployment carries positive expectancy. These high-fidelity executions, repeated ad infinitum, become the compounding units of both skill and balance. Outcome detachment is the psychological firewall against emotional hijacking. Profits and losses are inevitable, the response to them is elective. Detachment is not apathy but observational neutrality, results are data points, not verdicts on identity or competence. This habit inoculates against fear-induced capitulation, greed-fueled pyramiding, or vengeance-driven escalation, all existential threats to diminutive accounts. Consistency in execution is the gardener's ethic. Seeds of disciplined trades are sown daily, irrespective of mood or market temperament. A single lapse may seem inconsequential, yet serial deviations erode the substrate faster than any exogenous shock. Each rule-bound trade is a photosynthetic increment, aggregating into canopy-level growth. Risk management as mental reflex, not rote arithmetic, ensures no single miscalculation metastasizes into catastrophe. Obsession with setup perfection is futile absent proportional capital commitment. By anchoring risk to a fixed percentage, the trader operates from strategic equipoise rather than panic, creating the preconditions for systematic win maximization atop controlled loss minimization. Visualization evolves into scenario-based simulation, anticipating not merely entries but entire sessions, cascading wins, abrupt reversals, news-induced turbulence. This rehearsal forges neural pathways that default to composure, transforming a $100 crucible into a forge for unbreakable confidence. Avoiding comparison is the antidote to externally induced distortion. Social media's curated triumphs and guru hyperbole breed impatience and avarice. The sovereign trader fixates on process metrics, recognizing that compounding trajectories are idiosyncratic and demand bespoke patience. Self-awareness converts latent vulnerabilities into managed variables. Propensity for revenge trading? Predilection for FOMO entries? By mapping these tendencies and engineering countermeasures, the trader neutralizes subconscious saboteurs. Continuous learning ensures the $100 account appreciates intellectually as well as financially. Stagnation is the silent killer. Perpetual assimilation of market morphosis compounds edge alongside equity. The synthesis of detachment, multidimensional patience, unflagging execution, risk internalization, advanced visualization, comparison immunity, self-awareness, and relentless learning constructs a psychological exoskeleton. Within it, the $100 ceases to be mere seed capital and becomes a living testament to disciplined cognition. Each trade, each restraint, each reflective pause propels a trajectory from modest origins to audacious destinations, not through providence, but through the daily cultivation of an indomitable trading mind. Chapter 3. Resilience, Perspective, and the Architecture of Sustained Compounding. By this juncture, the scaffolding is erected: emotional governance, patience, discipline, and risk mastery. Yet exponential growth demands an additional stratum: mental resilience fused with a strategic lens that transcends rule adherence. Perspective is the perceptual shift that saves small accounts. Treating each trade as existential theater invites fear and greed to the decision table, eviscerating rationality. The resilient trader frames every position within a grander sequence. No solitary outcome defines the arc. This macrovision stabilizes effect, diminishes stress, and fertilizes the soil for compounding. Adaptability prevents ossification. Markets are Darwinian. Rigid strategies calcify into relics. The adaptive trader audits performance ceaselessly, tweaking for volatility regimes, liquidity tides, and behavioral feedback, ensuring the account evolves in symbiosis with its environment. Handling wins with strategic sobriety is non-negotiable. Post-victory euphoria often births overconfidence, risk inflation, and rule abandonment, traps lethal to fledgling balances. The master returns instantaneously to process, mining gains for replicable insights rather than permission to deviate. Visualization ascends to session-level simulation, rehearsing volatility spikes, news shocks, and streak psychology. This mental wargaming forges equanimity, rendering live execution an echo of premeditated calm. Self-worth decoupling severs ego from equity. Tying identity to balance invites egoic overcorrections, revenge trades, desperation bets. The resilient trader anchors self-concept in process fidelity, ensuring decisions flow from logic, not lacerated pride. Journaling transmutes raw experience into distilled intelligence. Objective chronicle and periodic autopsy reveal subterranean patterns, transforming potential weaknesses into preempted strengths. Strategic scaling accelerates compounding without fracturing risk parameters. Methodical position increments, post-validated consistency, within percentage bounds, ignite convex growth while inculcating responsibility for larger capital. Process orientation displaces result fixation. Success metrics shift to execution quality, setup diligence, risk precision, post-trade review. This reframing lightens psychological load, as progress is measured in behavioral integrity rather than P&L volatility. Attention hygiene, curating focus, excising noise, multi-market surveillance, social media, peer comparison, preserves discipline's sanctity. A uncluttered mental environment is the greenhouse for compounding. Long-term patience is the invisible turbine. Months, years of incremental, rule-bound decisions aggregate into the $100 to $10,000 metamorphosis. There are no kinetic shortcuts, only the quiet tyranny of consistency. Compounding operates bidirectionally. Lapsed habits detonate progress, sustained ones magnify it. The journey is as much psychological metamorphosis as financial accretion. Emotional intelligence, strategic acumen, and resilience forge trade by trade. Chapter 4. Integration, Execution, and the Inevitable Alchemy of Mindset. The capstone is integration, fusing every principle into a seamless, reflexive trading existence. Here, psychology is not auxiliary but the prime mover. Pre-market ritual is non-negotiable. Setup reconnaissance, news triangulation, visualization of contingent futures. This conditions the mind to treat uncertainty as choreographed rather than chaotic. Risk mastery must be autonomic, position sizing a reflex, never a negotiation. The $100 account survives strings of losses only when no single bet holds existential weight. Outcome detachment matures into data-driven equanimity. Losses are diagnostics, not damnations. Wins are validations, not vindications. This stance accelerates recovery and preserves consistency. Compounding as philosophy. Small, risk-contained edges, executed repeatedly, outpace home run hunting. Patience is the gatekeeper, discipline the executor. Journaling closes the feedback loop. Execute, record, dissect, iterate. Self-awareness and emotional IQ become superpowers. Resilience is the final armor. Volatility, drawdowns, black swans, none breach the fortress of process. Challenges are transmuted into refinement fuel. When preparation, risk, detachment, compounding logic, journaling, and resilience interlock, Trading becomes predictable, not in market outcomes, but in behavioral fidelity. The $100 account, once a fragile ember, ignites into a self-sustaining blaze of growth. In summation, the odyssey from $100 to $10,000 is not a lottery ticket redeemed through luck or arcane systems. It is the triumphant culmination of mental habits, emotional sovereignty, and disciplined execution sustained across market seasons. Every trade is a vote for the trader you are becoming. Master your mind, and the money follows, not as a miracle, but as the mathematical certainty of compounding applied to both capital and character. The market will test you relentlessly. The question is whether you will answer with the unyielding architecture of a mind forged for victory.